like to welcome everybody to Advanced Futures today. Thank you for coming to see our seminar, our presentation. We're going to have the ICE Exchange with us. Scott Brusso, Director of FX Sales, will be stepping up and giving us some background on ICE's financial products, along with Ted Doukas, Director of ICE Futures US. So looking forward to hearing what they have to say. If you have any questions, please ask them at the end of the presentation, and enjoy.
And we can get this PDF to us?
Yeah, we're going to record it, and that way it'll be up on our website. Okay, thanks.
Good seeing you, man.
Good to see you, Mike. How are you?
Good.
Okay, good afternoon, everybody. I'm Ted, and along with Scott, we're both in business development in the Chicago office, and essentially we handle the financial products for the exchange, which include obviously the Brusso indexes, which I'm responsible for, and Scott's responsible for the dollar index and the FX products. We got a nice informal crowd here, a small group. Nice to see some familiar faces, so we're going to keep this pretty informal. I'm going to go through my materials hopefully pretty quickly. I want to leave time for questions near the end, and just going to go over the main features of the Brusso complex, talk a little bit about ICE itself, just give you a brief overview on that, and talk about some of the reduced fee market making programs we also offer as an exchange. So in terms of questions, it's probably better, since there's two parts of the presentation, Brusso and DX, if you guys hold off on your questions until Scott finishes, and then we'll address everything there. Okay, so work this correctly. Okay, that's just our disclaimer required by law. The legal department is going to put it up there. Just going right through it. Let's start with just ICE itself. This slide just gives you an overview in terms of some of the major milestones of Intercontinental Exchange ICE. The main thing to really point out here is how quickly ICE has grown. I mean, ICE has only been around since 2000. The exchange is only 14 years old, and we've had obviously a tremendous growth pattern, as you all are well aware of. A couple of things to point out. I'm not going to go through this point by point, but essentially ICE has been able to develop market share, bring products to market, and really grows an exchange by acquiring other exchanges. I mean, ICE started off in 2000 with our chairman, Jeffrey Sprecher, basically having the idea that there was a great opportunity in the energy space. At the time, Enron was imploding. There really was a need for electronically traded energy contracts. Jeffrey had the foresight to see that, and he quickly put together ICE platform in the initial stages. The first major acquisition was 2001 when we acquired the IPE, the International Petroleum Exchange. The IPE is now ICE Futures Europe. The next major milestone, just skipping down a little bit, would be 2007. 2007, ICE continued to acquire other exchanges. They bought the New York Board of Trade NIBOT, which became ICE Futures US. ICE Futures US is the exchange where Brusso and DX trade on. It's the exchange, as I mentioned, Scott and I work for. And the same year, we also bought the Winnipeg Commodity Exchange, which has now become ICE Canada. So essentially, by buying other exchanges, ICE was very quickly and adeptly able to enter into the futures markets and essentially build market share. And then just going on in terms of other major milestones without talking about them independently. The last one obviously is the real big one last year in November when ICE acquired the NYSE Euronext along with the life exchanges. And currently we're in the process right now in terms of migrating all the life products to our exchange, and that's something which is going to happen in stages throughout the rest of this year. We're going to have the first set of products, which will be the MSCI indexes and the interest rate products early on in June. The rest of the products will migrate in September. Okay. Just to give you an idea about ICE Futures. ICE Futures US again, which was the old New York Board of Trade. Our main product groups are the agricultural products, which you're all familiar with, softs, sugar, cocoa, cotton, coffee, orange juice. Very actively traded. We used to have a trading floor for those products in New York. Trading floor has long since closed. ICE believes in electronically trading all products. We closed the trading floor in 2007 for the softs, and then 2 years ago we closed the trading floor for the options. We also list grain contracts, which are not very actively traded, but they are still listed if you have an interest. And then obviously we have the Russell products, which we have exclusive rights to, as well as the dollar index currency pairs. We're going to be rolling out credit index futures later this year. And we have some of our energy contracts, which trade in ICE US. Okay, let's just talk a little bit about, in terms of Russell. Our Russell contracts are institutional benchmarks. You know, this was put together by Russell Investments. Gives you an idea in terms of institutional demand, how much assets under management the various indexes have. And the main thing to point out is the fact that 9 out of 10 leading indexes in terms of institutional assets are all Russell indexes. Okay, so we are essentially an institutional type of product in terms of the futures contracts we're listed on. Excuse me one second. And something stuck in my throat. Sorry about that. Okay, Russell 2000 is our flagship product. Russell 2000 is the recognized small cap benchmark for the U.S. equity market. Essentially what Russell does is each year, once a year when they do their index reconstitution, they rank all the stocks in the U.S. based on market capitalization. Out of the total universe, they look at the top 3,000 stocks. The top 3,000 stocks based on market weight, market value, comprise the Russell 3000. Then they take various subsets of that. The top 1,000 stocks based on market capitalization make up the Russell 1000, which is the futures contract we trade. The second 2,000 stocks, stock number 1001 through stock number 2, through stock number 3000, make up the Russell 2000. So if you put together the Russell 1 and the Russell 2, you get the Russell 3. The Russell 1 is the large cap index we trade on ICE. The Russell 2 is the small cap index. The Russell 1 correlates very highly with the S&P futures. It's about a 98-99% correlation. They're all large cap. They're both large cap indexes. And between the two products, the Russell 1000 futures and the Russell 2, you have some very interesting spread opportunities. It's essentially your classic large cap versus small cap type of spread. We have a lot of activity that goes back and forth between those two products. We obviously have cross margining because all of our futures contracts are cleared by ICE Clear US, and anybody who's spreading the Russell 1 versus the Russell 2, the spread savings is anywhere from 80 to 90%. So that's a pretty active part of our business. In addition to the Russell 1 and the Russell 2, we also list the style indexes. The gross and value indexes for the Russell 1, the gross and value indexes for the Russell 2. Essentially, these provide market participants a different way of slicing indexes up. What we've seen in recent years, if I went back to, I will for a second, if I go back to the benchmarks, where you see the amount of assets under management for the value of the gross, the Russell 1, and the Russell 1 value, the Russell 1 gross, those numbers, I should have probably put up previous years, those numbers have increased substantially in the last few years. What we've seen is, during this bull market, since 2009, we used to see the S&P and the Russell 1 have higher proportionate assets under management, and now as the bull market's become more matured, more and more people are focusing in on different types of plays, and we've definitely seen a significant uptick in terms of assets for the value and the gross products. So we list contracts on 6 different Russell products. Just to give you an idea in terms of trading volume, the Russell 2 this year is averaging about 140,000 contracts a day. During the roll periods, the volume is anywhere from 190 to 250,000. The Russell 1 is less actively traded. On a typical day, it'll trade 1,000 to 1,500 contracts a day. During the roll months, we'll trade 5,000 to 10,000. And the gross and value contracts are average anywhere from 500 to 1,000. They are not the most actively traded products. We do have market makers in there, which I'll get to in a second, but they are all relatively liquid types of products. And then at the bottom, you have the ticker symbols for all 6 of our products. That information is obviously on our website. And we also trade Russell futures options as well. Okay, contract specs, just very quickly, very boilerplate. All 6 of our products have your standard $100 multiplier. So we still refer to these as mini contracts, but when you have the Russell 2000 with a notional value now of about $117,000, it's kind of hard to say it's a mini contract, but you know, the other major indexes are all in the same situation. So $100 multiplier, 1 tick is $10. The Russell 2 is definitely a 1 tick market. You will see it trade all day long, even though it's a very large index value, it trades at 1 tick. You'll find that the Russell 1000 is probably a 1 to 2 tick wide market, and the value in the gross contracts are usually a 2 to 3 tick wide market. Contract months, no surprises there. Quarterly contracts, trading hours. We're a little bit different than Globex products and other U.S. products where ICE, our exchange, is open 22 hours a day. In terms of Chicago time, our trading day begins at 7 p.m. Chicago time. We go non-stop right through to 5 p.m. the next day. Okay, we have a 2-hour halt just for trade processing and clearing. We do not stop at 3:15 like the other exchange does and reopen. We just go straight through to 5 p.m. Chicago day every day. In terms of settlement price, we do have obviously the 3:15 p.m. settlement price. We use VWAP in terms of determining that settlement price. Just standard stuff similar to other exchanges. Final settlement, special opening value, the SOQ. We settle on the opening on the 3rd Friday of every month. We trade Russell futures right up to the 8:30 expiration time, and we get a fair amount of trade every quarterly expiration on that 3rd Friday. Price limits, position limits, they're all in line with other exchanges. Okay, just a little background in terms of the ICE trading environment. I mentioned market makers. We do have multiple market makers in all 6 Russell products. To be a market maker for ICE for the Russell contract, it's very competitive. We require the market makers to quote the products actively throughout the day. They have certain volume requirements they need to maintain, and essentially we're very proud of our market makers. They do a really good job in terms of maintaining liquidity. When you get into the roll and the quarters, they quote the spread very actively. We have market makers who help out in terms of providing liquidity for block trades and EFPs, and it's just been a very good experience with us in terms of working with our market makers. Block trades. ICE is very block trade EFP friendly. Unlike some of the other exchanges where they put limits in terms of block trades and they don't allow blocks for certain contracts, ICE has always been under the belief that it's in our best interest to facilitate block trades. We have a very low minimum for block trades for Russell. It's only 20 contracts. And we realize, especially for some of the less liquid contracts and the value in the gross, sometimes liquidity is better served if you allow participants to put on blocks very readily. So we encourage block trades. We have a very efficient mechanism called ICE Block where participants enter their block trade information, and it's been very good throughout the years in terms of helping us build up market penetration. For the Russell, we have cross-margining against the equity index products, which would be the IWM options and RUD options, which trade on the securities exchanges. That eligible participants would be market makers and prop groups, very similar to the type of cross-margin you see with the S&P products, with the CME and the OCC as well. We utilize fair value procedures at the last business day of the month, like other exchanges do, where we have market participants provide us their estimate of fair value, and then we obviously have trading halts and price limits, and all coordinated with the underlying market, and very similar to the other exchanges. Traded index flows. Just want to mention this briefly. This is a new type. It's an order type actually, which we rolled out last year. Basically. Rolled out last year based on customer input. We had a number of the major broker-dealers, FCMs, and some of the big index managers come to us telling us that they would like to see a way where they could lock in the closing value, the closing cash value on for various types of trades they want to execute. TIC is very similar to TAS. If you traded other ICE products, for example, the dollar index, we have TAS trading, which is traded at settlement. locking in this future settlement price. In this case, for TIC, we're able to lock in the closing value of the cash index plus or minus the premium. So in this example here, the way it works is if somebody wants to buy the closing value of the Russell 2000 cash index, 317 points below cash, they could look to put a bid on the screen. We offer TIC on the screen as well as blocks, or they can negotiate a block trade. Once the trade price is determined, somebody executes the trade, a TIC trade at 317 under cash. Our matching engine, our trade engine holds the trade throughout the course of the day. So people will execute this trade sometime during the day, and then after the close, once we get the final cash index, the closing cash index from Russell, which comes out about 315, the trade price will be the closing cash value of the index minus 317 points. So in other words, it's a very effective way for somebody to execute a basis trade, to lock in a price based on cash value. In terms of the experience we've seen with TIC so far, again, we launched it last year and we've traded about 4.6 billion notional so far in terms of TIC trades. It's worth pointing out that our two biggest TIC participants in terms of products have been Brusso and Value. It's no coincidence that these are the less actively traded Russell products because institutions want to trade these products. They want to do fairly decent size, and going through TIC and essentially arranging a block trade has been a really effective way to put on open interest. Actually today we saw a 2,000 lot, Russell 1,000 gross trade and done as a TIC, and a 500 value trade done as a TIC as well. So it's been a really efficient way in terms of putting on open interest, combining TIC functionality with block functionality. And as I mentioned, we're very friendly towards block trades. Okay, last thing I want to mention, just briefly, and I know some of you people here are going to have an interest in this. We do offer various fee and liquidity programs for Russell, just as we do for the dollar index and the FX contracts. We have two market maker programs. We have a Russell futures market maker program, we have a Russell options market maker program. As I mentioned, they're very competitive. The market makers have certain requirements. If anybody here has an interest in these programs, I'd be glad to talk to them after the talk, or if you want to send me an email or call me on the phone, I'll give you my business card. I'd be glad to talk about the specifics of the program. They are competitive, again, in terms of getting into the program, but there's a pretty good upside. The other two programs, which you'll both find details on our website on the Russell landing page, are our Russell corporate program, corporate member program, and our Russell individual member program. Okay, essentially what these programs do is if you are a member of any U.S. exchange, could be CME, could be CBOT, it could be CBO, ISE, it doesn't matter. You can own a membership or you can lease a membership. If you have some type of membership, you're eligible for reduced fees for Russell futures. For the corporate program, our normal fee for Russell is $1.14 a side. That's the all-in fee, which includes clearing. And if you're in the corporate program, you're a member of another exchange, you're eligible, your fee will start off going down to 70 cents a side, and you can get it down to 30 cents a side if you support some of our other products as well. For the individual program, you start off at $1.14, and you get down to 35 cents a side for your Russell trades. I have a number of participants in both of these programs. We've been running these programs since we've had exclusivity in the product since 2008. They've been very successful. And if you have any type of membership, that's something you might want to consider. I've actually had people lease memberships at other exchanges just because they trade enough Russell products to make it worth their while. So, true story.
Makes sense.
Yeah, so if you have an interest, there are details on the Russell landing page. I'd be glad to talk to you, after the talk. So, last thing, that's my name. My business cards are here. I'll make sure you all have one before you leave. Just some information you find on our website. There's an FAQ for the TIC order type I mentioned. We have a brochure. We have a number of other good things there. So, essentially, that's it for my part. I'm going to turn over to Scott. And let Scott take over. There you go, Scott.
I'd like to thank Advantage Futures for putting this on and Ashley for helping organizing it. Even if it is my daughter, I still thank her. So I've been at ICE now for a little bit over a year and a half. I was at the CME doing the FX products there for over 19 years. Launched most of the newer products, emerging market products, starting with Mexican peso and others, and Russian ruble. And took everything electronic back in 2001 and came over to ICE a year and a half ago. So a lot of this stuff, Ted did a very good job actually going over, so make it easier for me. But the ICE FX contracts are listed on ICE Futures US. They're also cleared, the same thing, by ICE Clear US. And the FX contracts on ICE have a long history of trading on the floors of several exchanges. So I'm not 100% sure if all of you know the history of it, but Ted had mentioned back in his slide that the ICE had purchased New York Board of Trade back in 2007, so we'll kind of move backwards from there. 2007 was when that purchase took place, but before that, New York Board of Trade had actually purchased a very small exchange over in Ireland, in Dublin, which was called Finex. So the FX contracts and the dollar index contracts were first trading in Dublin, and I wasn't there for that, but I believe it was in like 1982 or so. So there was quite a long history. And it was actually a very interesting history as far as FX goes, because while I was at CME, we did not list at that time, we meaning CME at that time, we did not list cross currencies. So of course in the currency world, I'm going to use cross in the sense of non-dollars. So in the case of back in those days, Mark Yen or Mark Swiss, or any of the different types of crosses were not listed at CME because foreign exchange could not be held in most of the trading accounts in the U.S. So at that time, Finex basically had a pretty good hold on the FX contracts for the cross currencies, and also they developed the dollar index. Some of you might be aware of, you've heard before of the big hedge fund, Paul Tudor Jones. So Paul Tudor Jones was on the board of Finex, and him and Eckhart Trading, some of the big CTAs, some of the ones that helped build a lot of the futures markets, were there at Finex and were responsible for helping to build the dollar index quite a bit. So that's a little bit of history for it. As it says here, the FX trading on ICE is electronic. Back in those days, the trading was down on the floor of Finex, and it was pretty interesting the way that they used to do the EFPs there. You used to have you have to have a floor broker down there in order to come and post your trades. So it's a little bit of political ways of doing business, and kind of interesting in the way that you would find price discovery very different than when it finally became electronic. Because the numbers of contracts traded were quite small. I'd have to go back in my memory, but I'm talking 1,000 contracts, 2,000 contracts used to trade a day. And then once it went electronic, it would move up to about 5,000. And the biggest month we've ever had, which I'll show here later, was actually last June. It was trading in June, almost, it was over 60,000 contracts a day up until the last week, which is going into the 4th of July holiday, and it dropped off to the high 50,000 a day. So now it's, whoops, I should go back here. So it's all electronic now. The dollar index itself also has a very, very active EFP market for not just the euro crosses. It mentions euro crosses. There's some very interesting crosses that are not held at the other exchange now, and so there's quite a few people that want to get into some exotic type of crosses. If you know a lot of the traders and like yourselves, the markets have become so efficient in a sense that everybody's looking for. Where is there some real type of alpha? Where can I really find some different types of trade that's out there that's not being caught into this, tight little spreads that are in there? Many of these crosses, and as we mentioned in here, there's a lot of different currencies that are listed, a lot of FX contracts listed on ICE. These combinations quite often have, for very good reasons, have very nice movement in them, and have been something that a lot of, especially CTAs, hedge funds, and others have used. So, based on the most popular, widely followed of all benchmarks, if you take a look right now, even if you're looking on the TV quite often, you'll see that the dollar index is quite often mentioned, on there, because if you look at the other indexes that have been tried at different places and that have been out there, none of them have been successful. And in fact, I won't mention the name, but one of the most major banks in the world, which listed one of their own dollar index, in the last 4 or 5 months have been trying to talk to me to list their product with us in order to leverage the business that the dollar index has had. So it is not only the most successful, it is the only successful dollar product that's out there as far as the dollar index goes. As I mentioned, this 2013 volume record of 116,000 was a notional of $8 billion US dollars. The open interest recently is about 66,000 contracts, which is down quite a bit. I'm not sure if many of you have seen, but in the last 5 months or 6 months, the FX world has been in somewhat of a stalemate, and there's been a few reasons for it. The first part of trading last year, as I mentioned to you, going through June, July, was quite active. Once you moved into September or so, and the government shut down, a lot of stagnant prices were taking place in the FX markets, as well as the case of, you probably have heard many cases in the news these days about in the cash market, the OTC market, there was a manipulating of settlement prices, and so many of the FX dealers have been fired from their jobs and have been basically have lawsuits against them and court cases against them, and it's caused all of the major banks and others to really look very closely what's going on. And so because of that and because of the low interest rates, the FX markets have been moving somewhat sideways. So we'd be looking, and I think we'll be looking soon as the markets begin to pick up, especially if interest rates begin to move. Open interest could be up there higher at 90,000, 100,000 or so. So the market makers are quite often, they're a little bit different than what was done originally over at the old exchange as far as using banks. They're a lot of the high frequency shops that have entered into the market have learned how to interface between cash markets and other exchanges and trade. And a lot of them are some of the same ones that are in some of our other products like Brusso. So as far as dollar index goes, it's very liquid now. As a product, any type of trader can trade it. It doesn't matter if you're a hedge fund, a CTA, if you're a high frequency trader, if you're an individual. It's got tight markets, it's got liquid markets, and if the markets are moving like a day like today, it doesn't sound like a lot because it's, as I said, the markets have been quiet, but there was some movement today, and when we left it had been trading over 40,000 contracts today, so it's active enough. I've traded, before I started working at the exchange, I managed money, and I also was a chief dealer at a bank, so I've traded, but I never traded 40,000 contracts, so it's a fairly large amount. It's also used as a hedge tool. There are different companies and corporates, others, that have their exposure to dollars, and quite often, if the different pieces that make up the dollar index fits for what they're trying to hedge against, which is basically 6 currencies: the euro, the Japanese yen. So the euro is actually, it's heavily weighted by euro. Euro is 57.6% of the dollar index, and the Japanese yen, I believe, is something like 13.6. The British pound is, I think it's 11.9, and Canadian dollar is 9.6, and then there's also Swedish krona and Swiss franc. Swiss franc is the least of them. If you wanted those proportions there, They're basically in the on the website at CME. You're able to get that with the breakdown. So people use those as types of hedge tools, but they also use it as arbitrage. So there are many people that go in and trade against either the cash market or other exchanges, and then trade dollar index. But you have to be very careful, especially if you're using a cash instrument to trade these, because this is a geometric type of an index. And so if you were using cash, for example, and you were hedging doing euros and yen in cash, as the dollar goes up, the foreign currencies begin to lose value, they're worth less. And the dollar gains strength in that, and if you're not actively hedging it, you can find yourself not hedged if there becomes a very, very large movement there. And in the same way that Ted had spoken about reduced programs, there are reduced programs for the FX and the dollar index. One of them, which I'll mention here. So up to 60 currencies. We have contracts that are the same size as the exchange down the street. The thing that's a little bit better for many of these is that even though they're not necessarily trading them all the time, these currency products trade in half ticks. So you've got a little bit more opportunities about getting in and getting out at a finer type of pricing inside there. As Ted had mentioned before, the TAS traded settlement is somewhat the same as he had mentioned with tick, in that you can bid on a trade at settlement plus and minus what the settlement price is that's used in there. Here's the best part for you on our FX products. No fees for currency pairs traded on the screen. This should have been changed through 2014. Does not apply to dollar index. So if I was to give you an example, we have the same size contracts inside here as trades at the other exchange. If you were trading at the other exchange and you were not a member, you'd be paying $1 for the Globex fee and a 60-cent clearing fee. So to get in and get out, round turn, will cost you $3.20. If you trade, let's say, the same contract, the Euro contract at ICE, it's free as far as exchange fees. So it's already $3.20 less than whatever you're being charged at. Let's say here at Advantage as your FCM. So that's the benefit for that. There's EFPs and blocks which are also available, and these are for basically 94 cents. They say that there's no EFP charge, but what it does, it goes back to what they would be if there was a charge, which is 94 cents. Again, if you were to trade that down the street, that would be $1.60 or $3.20 a round turn. It'd be hard to see this, so I'll pass it. We have one other thing. If you're interested in FX, the traditional way of trading FX, I'm not sure if any of you know or not, but FX started trading at the CME in 1972. Back in those days, the tradition for trading was what's called American terms. The same way as you're going to look at Japanese yen and Mexican peso. So you're not looking at basically, like if you go down to Mexico, you go there and you exchange 13 pesos for a dollar. Well, you're not looking at 13. That's inverted when you trade. And again, this goes back to what I spoke to before, as far as because then your P&Ls would be in foreign currencies, which were not allowed. But it was also what the norm was for trading back in those days. Now with these ICE millions, these are traditional. You're going to be looking at, well, the euro's the same, but for yen, instead of trading yen-dollar, you'd be trading dollar-yen. And for Swiss franc, instead of trading Swiss dollar, you'd be trading dollar-Swiss. And same thing, Mexico. Well, Mexico doesn't trade in the millions, but if it did, it would be same thing. You'd be looking at dollar mex. So these are larger size contracts, more institutional, at a million unit size. So that'd be €1 million, or in the case of the others, $1 million, for example. So those are offered for 12 of the more active, or the most active pairs that are traded in the FX world. Again, I mentioned to you there's no fees for trading on the screen. These millions, the same as there was for the regular traditional sizes. Now, if you trade away, basically, here's a very interesting thing. If you happen to do trade large size, we have block trading. And block trading is the minimum for blocks on these is a minimum of 5 contracts. So that means for trading $5 million, it's going to be costing you $6, a little bit over $6 there for that. If you trade that same equivalent amount, $5 million worth, down the street, you're going to pay $1.60 times 40 contracts, because it'll take 40 contracts to get to $5 million at 125,000, for example, euros. So that would cost you $64. So this would be costing somewhere around a little bit over $6 as opposed to $64 in exchange fees. If you did EFPs for the millions, they're a little bit more. They're a $5 EFP and a $1.35 exchange fee. Still comes to about half the price of what the other exchange fees is. These are the contracts that would be available for the millions, which is $1 million Aussie dollars, £1 million pounds, €1 million euros, which is the same thing if they're the crosses. In this case, it's Euro Canada or Euro British pound. Euro Japanese yen is €1 million, Euro Swedish krona, and all of those are basically listed on the exchange website. Here's 4 currencies that are done now in what are called cash settled. As you know, FX contracts right now, most of them go to delivery. You know, if you don't get out of your contracts, at the end, you're going to be either making or taking delivery, let's say of yen or Swiss franc, Canadian dollar. What's out there now is these non-deliverable forwards, which are basically emerging markets. So in this case, the emerging markets for Brazil, the Brazilian real, the Russian ruble, Indian rupee, and Colombian peso are available on ICE. And they are basically, again, if you trade those on the screen, there is no exchange fees. And if you traded them via EFP, it's 30 cents a side. So it's very, very competitive rates. And the margins are especially very competitive.
You do baskets for the bricks?
I'm sorry, you're talking about blocks?
No, baskets, where you have all 4. You know, a lot of people trade the bricks, Brazilian, Russian.
Yeah.
Where
This
they-
is not the brick, because the C should be China if it was a brick.
Oh, okay.
That's what makes that up. But
Well, it's the
you
brie without
got the right. You got the
Well,
right.
that's going to be the next question. When's the Russian ruble? I mean, when's the Chinese? What do they call it? Renminbi or yuan?
Very good question. There's I don't know how much you pay attention, but there's a few things going on.
Because they've opened the ban, right?
Exactly. Well, what's happened with China basically is that China has been trading as a non-deliverable onshore, and many people have not traded China. I'm only repeating what many hedge funds and others have told me, because the currency seems to be somewhat held into a pretty close. They call it a band, so some people want to say it's uncontrolled. It doesn't go completely free float. Brazil had this back in the day. I don't know if many of you remember, but I was part of listing Brazilian real in 1996, and it didn't go free float until 2001, and then the volumes took off after that. So what's happened is that with Dodd-Frank and others, in the FX world, the contracts that were being designated to be traded on a CCP, through an exchange clearing, are the NDFs, which includes China. So the Chinese contract, the RMB, the yuan, basically renminbi with the yuan, has been an NDF currency caught in this very tight range. Now, more recently, there's been an offshore product that was created that clears Hong Kong. It's not a non-deliverable, it's actually deliverable. So that's why your question is very interesting, because that particular contract now that's trading there is doing quite a bit of volume and is not controlled, basically, by onshore.
It's settled in cash?
No, it's actually, they're actually delivering RMB for, if you trade it against dollars or against euros. So that's taking place in Hong Kong right now. And so it's kind of going to be kind of an interesting thing what takes place, that, let's say that...
Is there a Hong Kong dollar still?
Is there a Hong Kong dollar?
Yeah.
Yeah, there still is a Hong Kong dollar. It's not pegged anymore to the dollar.
So, so is the spread between the Hong Kong dollar and the renminbi pretty tight? Because if it's settled in Hong Kong, I'm just,
The Hong Kong dollar used to be a 1-to-1 to the U.S. dollar.
Right.
It's not anymore. So the renminbi, the Hong Kong one, basically trades against the U.S. dollar, and so that's where the relationship.
so it's settled in Hong Kong dollars or yuan or renminbi?
In yuan, it's in yuan and renminbi against U.S. dollars. So
Oh, okay.
if you, let's say for example, we'll just say for example, you were doing business and you needed Chinese renminbi, you would buy the Chinese renminbi, the RMB, and you would actually take delivery of the renminbi there in Hong Kong, and you would deliver your dollars for it. So exchange rate something like 6.2, for example. So if you did $1 million US dollars in return on, let's say, you would receive 6.2 million RMB. So now as far as the brick trading goes, I don't know if you've watched recently. It's very, very interesting because if any of you like looking at charts, you take a chart, go in and take a look at Brazil, take a look at Russia, take a look at India, and then take a look at China. As you know, Russia is a very interesting thing because when Sochi was getting closer to actually taking off, terrorists were of course talking there about blowing it up, and so if you took a look at the chart, you see the dollar really jumping. I mean, it was jumping quite a bit.
They creamed the rupee.
Yeah. Okay, so then what happens next? They seem like they settled down that there doesn't look like there's going to be a terrorist attack, but then we've had everything that's going on basically in the Ukraine. So if you take a look, you'll see a big move on the dollar, which has dropped the ruble down quite a bit. You see a big spike, and it's only flattened out lately when it looks like that's been settling down a little bit. If you look at Brazil, you'll see the same thing, and even if you take a look at India. Now, if you take a look at China, China is all of a sudden something that was being controlled and was very strong, is now all of a sudden going the opposite direction, is losing value. So there's a lot in the news these days about China that's saying this is because, for their exports. I believe that's probably true, but I also believe there might be less control over it now because of this offshore that's taking place, because that's something they cannot control. So anyway, as far as your answer goes, there probably should be a Chinese type of currency listed onto the exchange. Which is the correct one? How do we want to settle it? Those are things we need to.
Well, why can't you list it here and as long as it settles in Hong Kong?
Oh no, we can do that. That's not the problem. But we would want to see if we are going to make it a deliverable. Then in that case, then we have to set up the offshore account. So let's say someone like yourself, then you'd have that ability to actually take and make delivery in Hong Kong itself. That's a very good question.
So you should probably have bankers in Hong Kong then that should be able to flip it from an MB into a
Yeah. No, it can be done. That's not that itself is not the issue. The real issue will be whether will that actually take off, or let's say for example, if the government comes in, the CFTC and other regulators come in and say we want the Chinese renminbi, and then they maybe, if they include, these are supposed to be non-deliverables, but if they include the onshore one or the offshore one as well, then that would be pushing business to the exchanges. And so which one is going to be pushed there? So there's got to do a little analysis. I don't know if Ted put up here or not, but we also recently had purchased an exchange in Singapore. It was up on there. So there's some discussion there as far as being able to list some products over there as well. So that's going on for the future. So the EFPs and blocks, again, I don't have to go over. Ted had mentioned to you. Many of you are probably familiar with EFPs. They were done before. They're very much part of what takes place. It goes back to the tradition that I was talking to you about earlier, as far as when these non-type of foreign currency crosses were trading. There's much of that legacy business. It's now starting to move a little bit onto the screen. We're able to start moving that over, but a lot of that still exists today, and we can help find liquidity providers if anybody is interested for it. We put this up here, that there's no need for membership, in order to do block trading FAQ. And this was because we're doing a presentation for some people in Europe. And in Europe, on the exchange there, you need to have a membership in order to receive ICE, what's called ICE block on web ICE in order to put the trades in. It's not required for here, but we wanted to add that.
What does IFUS stand for?
That's the Intercontinental Exchange, and that's Futures US.
Oh, okay.
And so the all of the minimums, the price minimums, and others, and there's a FAQ on all of this that's on the website. So with that, that's my contact information. I have a card with if there's any interest for it. And we can take any questions if you have any other questions.
When you say the block trades, you have to be ECP compliant?
I'm sorry, what compliant?
ECP compliant, so if you're doing, if you do block trades in currencies,
Yes, so
where you need the $10 million capital behind it.
no, because these are futures contracts that we're doing. And so this is, these contracts, after you do a block trade, so when you do a block trade or when you do an EFP, let's say you would be calling a bank, for example, or calling some broker that, creates, has the liquidity for you. You're doing a bilateral deal with them, and then it's being put onto the exchange. Once it hits your account, it looks the same as if you traded it on the screen. It's a futures contract. It's not an OTC contract. So there's no need for that particular. In fact, that's a very good question because I've been in talk with a number of different people who have been years basically doing OTC, FX, especially for smaller accounts retail, and have been priced out of that. And so that are now looking to hook up and try to be able to establish that by trading futures contracts. And so because of that, I'm actually looking into the possibility of coming up with smaller, even micro-sized contracts possibly that might become useful for some of this clientele that used to trade smaller, especially smaller than the millions, but even smaller than the standard size.
So, with Clearport, if you do block trades, let's say for the
Yeah.
energies and that,
Yeah.
you have to be either grandfathered in as a floor member or trader at the NFA, or be ECP compliant with the $10 million capital and so forth. So this doesn't have to follow those guidelines?
No, we don't have anything like that for us.
ICE has, you have your own margining versus the Globex. It's completely different.
Completely
Yes.
different, yes.
Yeah, and theirs is a lot cheaper than Globex.
Yeah.
But I think it's not an exchange, it's a Dodd-Frank ruling that you have to abide by now. OTC.
Yeah, there was something, and I don't know all the rules, I don't know, but as far as ICE Europe, there might be some.
ICE Europe is different because it's
Right.
not
Yeah, because the
US.
Dodd-Frank only applies in the United States. So if you do ICE Europe or ICE Singapore, I don't know where or ICE Hong Kong, whatever it's called, it doesn't have to follow that.
Yeah, but ICE US, we don't have that restriction either. Yeah, so you basically only need to, your only requirement basically is that you meet the minimum. If you're doing a block, that you meet the minimum. If you're doing an EFP, there's no minimum. You can do 1, 2, 3, whatever. If you're doing one of these, the millions I was speaking to you about, the block minimum is 5 million. But then you're just going to be margin based off of, they've got a margin, let's say that's somewhere about 10 times the size of what the regular. So let's say if you did a euro contract, which is usually 125,000 for the standard size, that's about $2,000 or so approximately. So figure somewhere around 20,000 if you were doing the bigger size, the million. And so if you did 5 million, it would be 5 times that.
Yes. Is there some kind of trade secret that's known only to you that would lead you to believe that lowering commissions will increase business?
Is there? No, I don't think there's a secret about that.
So what's really going on?
Well, I believe.
Competitive marketplace.
No, I believe, it really depends on, you can never speak about different places. You generally need to look at your businesses and, I'm going to date myself here, but I remember when Arby's first opened up, the Arby's place with
Yeah.
roast beef sandwiches.
Right.
I could barely get my mouth. on that sandwich was,
Now it's
now
manageable.
it's a little tight.
So I go to Neva, never eat beef at Arby's.
So my guess is that, of course, as we get, we get more successful and more trading takes place, probably, fees would, possibly go up. I mean, if you're talking about why there's ones that are free here, it's obviously to attract business right now because, that business hasn't been here. The only business that's really been around has been the dollar index and the cross trades that were kind of legacy EFPs, and it's just starting to move right now. The euro contract is really one of the only liquid contracts. So as I said, it trades in half ticks. It's usually about a tick and a half or a tick wide, but if you could jump in the middle there, that contract moves around enough where you could actually deal on it fairly easily.
And keep in mind the products we're talking about, whether it's FX or the Russell indexes, I mean, these are competitive products. We don't have the monopoly. Somebody could go trade the S&P, NASDAQ, or Dow instead of trading the Russell. So we offer member fee programs just to put us in a better competitive light with the competitors. Same with the FX contracts. And if you look at other products at other exchanges, grains and softs would be a great example. You guys know how much it costs to trade grains and softs at ICE and how much it costs to trade grains at the Board of Trade. Essentially, those are monopoly products, and they charge a lot more. So we're doing everything we can to make sure that we are competitive, and when we offer an exchange member program, we're putting our fees for the dollar index and the Russell in line with what other members are paying to trade at other exchanges.
Well, making it competitive, because I mean, in the case of FX, just like I had to do at other places, you necessarily find out what is being put out there by the OTC market. How are those being priced per million? What's their pricing? If you price yourself out of the game, then you have a problem. So the other thing is that did you watch the Blackhawks?
Never.
Okay. Well, when you're watching them, then you don't see ice up there all over the place. So maybe it's better to give back some stuff. Back.
Everybody
I don't
in this
know.
room
I'm
watches
not
them.
saying anything, but maybe.
Taze just got hurt, he's out for the rest of the season.
Right. But you don't see ice is not necessarily out there, but so maybe it leaves us some other opportunities for offering a few things for our customers to be able to come.
You could do grains against us, is that what you're looking at? Huh? No, he's thinking, so you could do grains in China cheaper if you, instead of doing it the US way, right? If you have it settled in Hong Kong versus the Chinese, is that what you're looking at?
Yeah, but it's not that simple. I mean, the way that the Bank of China kind of controls the real value of the RMB. And, they're trying to say that they're trading offshore. You can trade, crude oil offshore, but it's really, the market's really mainly in China. It's really still exclusive to mainly in China. So it's not really a free-floating currency as all the other currencies that you're referring to.
Yeah, that's what I mentioned before.
Yeah.
It's not a free float at this time. The offshore has floated more than that. If you go into the machines and you take a look and you put on there, for example, the offshore, which is CNH, as opposed to putting up RMB or putting up CNY up there, you will see a difference in trade because it does have a bit more freedom, but that freedom is still within a certain band. Yeah, it's not just like others that are free flow.
Now, these currencies that you're listing here, will they trade on your same platform that they trade the grain?
Trade on
products?
web-ice, or any way that you come into. You have membership, or you have access right now to.
I have access into the ICE Europe, trading their DMA access into it. But as far as coming into the U.S. exchange, I think it's a little different entity.
Yeah, you'd have to get access.
You have web ICE currently?
Web ICE, but I use it primarily for the
Energy.
European.
Yeah, it's the same platform.
Yeah.
And all you need is just have permissioning for our products.
Okay.
So it's the same platform, same functionality. Matching engines are all located in Chicago. Nothing's different.
So if I'm already approved for ICE Europe, it's fairly simple to get
Yes.
set up with this.
I think you have to go through your administrator
Right.
and then try to.
Is this already launched, or when do you launch the currency product?
No. These currency products, as I mentioned when we first started, have been around. There's been some newer ones that have been put on, but basically from the Finex to the New York Board of Trade to now ICE, They've been around for a long time, so.
So
The
you're
one,
saying-
the one that's really, the one that's trading on the screen is the euro right now. The euro dollar is the one that doesn't trade a lot, but it can trade as much as you want. There's enough people looking. Some of the others, spreading it out. There's 60 some of them, so, it's gonna take a little while, but some of them are beginning to pick up. Okay, well, I think
Thank you.
we've hit our time, so thanks. Thank you.
Can I-